Hello traders, The title of the video is how to trade tricky Fibonacci sweet spot trading signal like a pro. Let's get started. I have here a tricky Fibonacci sweet spot trading signal or trading setup. All right. For those of you that are not aware of what is a sweet spot Fibonacci trading zone, go to www.dayprotrader.com. Check our webpage relating to the sweet spot zone. The sweet spot Fibonacci zone is the zone between the 50% and the 61.8% Fibonacci retracement. And most traders know that. Everybody, in fact, knows that. But there is a difference, all right? Sometimes that you need to pay attention to this very carefully. You will see on the hourly time frame, you see on the 2 hour time frame, 4 hour time frame, you will see it also on the daily chart, the tricky Fibonacci retracement, sweet spot of Fibonacci zone. And this is one example here on the monthly chart. And from today, you'll be able to spot it and know that this one is tricky. What was happening, my friend, is this. In the past, all right, were you born that time? How old are you? All right. When a financial instrument has completed a bullish trend, people often buy in the sweet spot zone. All right. So people are still doing that today. Hedge fund usually buy blue chip stock that have a strong balance sheet in the sweet spot zone. All right. And some of those market participants are individual investors that do not understand technical analysis, that do not use Fibonacci, and they just learn it that it's better to buy it if you pull back to the switch position. It's a good place to buy, okay, because it's discounted up to 61%, or something like that. So they usually place order in the sweet spot zone to buy. But there is a sweet spot Fibonacci zone that is tricky sometimes. And this is one example here. So here it is. This financial instrument, which one is this one? Nordic American TNK ship. The epic is November Alpha Tango NAT. Here it is. So as you can see here, I put here, do not rush to buy anyhow in that sweet spot zone because of the green declining trend line. That's it. Here it is. So the tricky uh, Fibonacci sweet spot signal will often take place below a declining trend line like this. You see here? You see, this is it. It's a violation of a market pattern. You see, the price was going down. See? But because it reaches the sweet spot zone, as you can see here, people were buying here. Okay, if you can handle it carefully, nothing wrong for swing trading purposes, very fast, carefully. You see, but it's going down. In fact, if you look again carefully apart from that trend line, this section here, okay, pay attention, this section here, are you watching? Or do you always watch a part of the video and run away? Okay, do you have time to watch in full? All right. As I said to trader, grab your favorite drink, sit and enjoy, okay? Now, you see the green triangle? You see that triangle? That right angle triangle here? Have you done with math before? That right angle triangle here, 90 degree, right there. So price was going up, yes or no? There was a trend. The trend in fact has started here, and it went up all the way here. So since 2000, that trend has started, and start pulling back in 2005, isn't it? Come to the sweet spot zone between the 50% and 61%. These are okay. Individual investors want to buy here. So price went up 1, 2, 3. All right, what's going on? come back down again to the same zone from a double bottom chart pattern. And I will say that one is mine. If you ignore, you see, just connecting this point here, this point, and this point here. Those 2 points will allow you to draw the trend line. You see, then you know that we have a bearish trend line. So if you buy here because of that double bottom chart pattern, you should be prepared to take some profit here and know that it can probably resist there. It come back to the same zone, try to go a little bit below it. Now we have a triple bottom. People are still buying in a sweet spot zone. They don't know that this one is a little bit tricky because of what? That bearish trend line, and also because of that triangle. The triangle is telling us that anything is possible. It can break a bow, find a support, or it can break below here and continue to rush down. And the professional will set their target right there, like this. You see, almost in the target zone, isn't it? That's it. It didn't reach the target, but in the target zone, there's a target there. You see, price went down to $1.75. So they are satisfied. They don't want to hang around when you go to the penny zone. Okay, all right. So see how they sold it down here. The reason why the price ran down without rally here, because of those that were buying here in the sweet spot zone were taken out very fast. Price ran down. So for that target, there was a midpoint target somewhere in the middle here. And you see that's the reaction here. And because we are approaching the ultimate target, that's again a reaction here. So what I'm saying to you, from today, you won't fall into that trap again. If you are aware of a declining trend line like this, and also okay a triangle like this, people bought those up. This is a genuine buyers, yeah. But after a further release here, this is the warning now. After this top is formed, now we know that we have a tricky inverted head and shoulder, not inverted, tricky sweet spot zone. But sometimes doesn't mean that it cannot go up. So the best place to buy, if you are afraid or you don't want to play in a tricky zone, or if you want to play here, you must be prepared to secure your gain as it's going up, it's coming here. So you are very careful. That's how you want to play gently, 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 coming out, coming out. So, but it will become truly bullish if it breaks above that. Okay, bearish trend line, exhibit a higher low or exhibit a bullish chart pattern, giving us a good reason, okay, to buy it above the trend line. This is better zone. As you can see, it's stuck below the trend line. In fact, people were selling even here near the 50 in the sweet spot zone. Some traders, professionals, showed it on the edge of that bearish trend line, and again here, and they force it down. That's it. So, and then here it is. It's going down. So this is it. How to trade the tricky Fibonacci sweet spot trading zone like a pro. So how do you trade it like a pro? All right. Trading like a pro means that find a trading setup and then use a different time frame trading method. So if you were here, all right, as a swing trader or as a position trader, okay, you receive a signal, you take it gently, okay, all right. Keep securing your gain as it's going up. Keep securing your gain, okay, all right, or take some profit, or draw the Fibonacci retracement for the price move, this segment from here to here. So you'll be watching the 50% Fibonacci retracement of that segment. So you buy here, you come near the 50% Fibonacci retracement of the first segment like this, grab your profit or secure your gain. All right. If you were taking it here after this top, so if this common setter line is broken, that's your bullish trading setup right there. You will implement a top-down trading method. You are taking it up gently. Watch the 50% Fibonacci retracement of this segment. Now you have the bearish trend line. You will be also watching that bearish trend line. Again, if it was a successful trade for you, again, you are interested in it again, here you will become a bit careful because what is happening, the price telling that people are selling on the edge of this trend line now. They sold it there, they sold it there. Now they sold it here, and they sold it again here. So when you are buying here, you'll be very, very careful. Securing your gain, and here it is. Okay? And it pop out and it's going down. You see? It's going down big time. And that is the target. Here it is. Are you getting it now? So all I'm saying, when you are trading the tricky Fibonacci retracement, be very defensive, all right? Be very protective, meaning that securing your gain, taking profit, taking the best setup, and most importantly, use a different time frame trading method after you have spotted a trading setup. If there is a signal and you enter the trade, if the signal fails, close the trade. Because of what? That bearish trend line. Once it's out of this triangle, set the target, okay? Measure the height of the triangle and set the target. Draw the midpoint target because people will be taking a bit of profit near the target level or midpoint target and also near the ultimate target level. All right. So this is about how to trade tricky Fibonacci switch support a trading signal like a pro. In fact, it's a continuation. If you are somebody that is maturing, which I see for a lot of TST, WSYSD traders that are maturing, they start paying attention to the news. They start paying attention to the fundamental. In fact, last time a trader sent me email, I said, Joel, he was reading a book and the person was saying the fundamental are more important. That's the way. You want to combine your Fibonacci trading with fundamental analysis. If you check probably this stock at that point in time, you do the Google Assist there, you check the story, are they making money? The liquidity. The liquidity is the most important thing. Check the cash, money in the bank. Money in the bank. That's the important thing, all right? Okay? Not the solvability, but the liquidity, all right? Check the story. What's going on with that story? Probably things are getting a little bit difficult for them. And when the hedge funds spot that, you can have the best setup at the sweet spot zone. They won't be interested because they know that the stock is struggling a bit or the company is struggling a bit and they just want to sell. And you can expect a continuation like this. This is a continuation pattern when the price pull back a bit and then consolidate in this session and then resume to go down because the fundamental are not supporting the technical trading, talking about the sweet spot zone where people often buy after a bullish trend. The same thing we see also when we have a bearish trend. Okay, so you see a bearish trend in place, all right, and a prior rally to the sweet spot zone. People want to sell, they are selling there. Sometimes you see the same scenario, all right, the same scenario when the price will be stuck above a bullish trend line. So in this case, we have a bearish trend line. In that case, you see a bullish trend line supporting the price maybe. So here it is. See something like this, okay? So it was going down. Now you go to the sweet spot zone. It's a downtrend. People want to sell in the sweet spot zone. So now, okay, we see this first reaction. Okay, the people saw it down. Okay, that's the first segment. First segment. That's what we are talking about. All right, and so on. Sorry, I'm talking about that's the rally. That's the first segment. That rally there. That's the first segment. All right, and then you do blah 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 along. Okay, along a bullish trend line. Like okay, we see this one here. You know that that's a tricky one in a downtrend. So you play carefully. All right, and so on and so on. All right. So if you have any question, suggestion, or you want us to talk about another topic, you see, George, you are talking all the time about Fibonacci. I want you to talk about the divergence or something else. Put in the comment section. Don't mark the video down because I do not talk about scalping or breakout trading. All right, you are tired of Fibonacci. Put in the comment section, and in due course, I will be recording another video to answer your specific question. So that's it. If this video has been helpful to you, you learn something from it, all right, you gain something from it, don't go away. Log into your YouTube account. If you forget, when you log in next time, remember to give us the thumbs up. That's very helpful. Then Google will promote the video for us for free if they see a lot of like. So other traders also may see the same video. So when you are trading this setup, they will not come back and mess up your trade. You don't want them to do that. If they don't know it, they can try to mess it up. All right. So if you like it, give us the thumbs up. If you say, George, how long have you been talking to me? You say to me to watch the video in full. I sat for 15 minutes. It's all garbage and nonsense video. Repackaging, talking about the same thing for 10 years, George. Shame on you. All right. Mark it down, please. All right. However, if you say that, George, that's an excellent tutorial. What are you talking about? Okay, feel free to share it on the social media. Subscribe to our YouTube channel, Day Pro Traders, and be sure to click on the notification bell so anytime we record a new video, you will be the first person to be notified. So this will conclude our discussion today about how to trade a tricky Fibonacci sweet spot trading signal like a pro. So the trading signal derived from a trading setup. So this is a trading setup, and when we see the signal, all right, we go to the entry time frame, talking about a different time frame trading method. The setup, the signal, and the low risk entry point without ignoring the fundamental, the economy news, and the market environment. The market first, Dow Jones, the market first, S&P 500, the sector before the individual financial instrument. The heart of the trading triangle is what? The market leaders, the economy news, and the fundamental. So I talk about trading drill, setup, signal, entry point. There is something I talk about trading triangle. Now, this is about professional trading. When you are ready to buy, you check the S&P 500. Is it bullish? Is it bearish? What the market is doing that day when you're about to enter the trade. You take always in consideration the market. And then if you see the sector, all right, what's going on in that sector, technology sector, energy sector, what's going on in that sector at the moment, in the sector bullish. Okay, now the financial instrument, that's what we are down today, the financial instrument. Economy news, fundamental, Google Finance, all right, uh, Yahoo Finance, all right. You trade Forex Factory for economy news, all this into consideration. And now you say, George, it's too much for me. Okay, good. Don't worry. Take one. Okay, which one can you start with? That's it. When you start, you're going to move forward. Take one, start applying that. When you master, you go to the next level, and so on and so on. You say, George, I'm a new trader. Okay, new trader, and you like this video. What do you need to do? Use a demo account. I say it all the time. Don't watch a video like this and then you just go and start placing trade. I've done it myself. It doesn't work. It doesn't work at all. Okay. Use a demo account. Practice, practice. Master that trading setup. Once you master it, it becomes yours. By practicing, you're going to make a lot of mistakes. You'll be surprised when you start using a paper. You can sit down with a notebook and try to apply this strategy. You'll be surprised. Okay. You make a lot of mistakes. Say, what went wrong? And then you keep polishing it, polishing it, and you own it. So it's pointless to learn 100,000 of trading strategy and say it's all garbage. Pick one or two or three, the one that you like, the one that is working for you, and then it just okay, bang on it until the door is open for you. Am I talking too much? So this is it. Okay. Happy trading to you all, and I will speak to you soon. The financial instrument that we are analyzing today is Nordic American TNK ship. As I put here, the message is this: do not rush to buy anyhow in that sweet spot zone because of the green declining trend line. If we have a downtrend first, we'll be talking about a green bullish trend line. This is about how to trade tricky sweet spot Fibonacci trading signal like a pro, different time frame trading method. Thank you for watching.